Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier, and this is CPI Live. So today we're going to unpack the CPI numbers that are, quite frankly, this is one of the biggest economic events on the calendar. I say a Fed meeting's number one, and probably CPI is going to be number two. NFP, I would even say NFP is a distant third to CPI right now. Inflation has been the number one talking point in the world, the market driver of all market drivers for about the last 2 years. Now, remember where we're at. We flooded the market with unlimited liquidity after COVID-19 to make sure we didn't have a global financial collapse. Since then, the game has been trying to take that liquidity out of the system without causing a market crash or a recession. I think the jury's still out whether we get either, but what I will say is this, is you've got an absolutely huge economic number coming our way, and I'm going to show you a little bit of why I think that everybody knows this could be a major market mover. So let's get right on it. This right here, this is one of my futures brokers. These folks really, they jacked their margins way up to about 25%. That is a huge increase, and they did that to really mitigate the potential damage and the leverage that their clients can take or apply during this CPI report. So you'll see right here, there's only a few times that they adjust the margins on the calendar. CPI is one of them. PPI is another one. Non-farm payrolls are an FOMC meeting. So right there, we've got some stiff margins working. If you're going to trade that E-mini S&P 500 right now, your day trading margin, but 25%, you went right there from about 400 to 3650. That is an absolutely stiff margin increase. Now you'll see that in your forex brokerages as well. They'll cut your leverage down. They'll say, hey, instead of 500 to 1 leverage, you can use 100 to 1. They'll also adjust the spreads. So you have to be very, very careful trading at a time like this. This is the most dangerous time to trade by far. But what we are going to do is we're going to trade it. We're going to get in there and trade it. Team Marina, good to see you. Good morning. Yeah, it's bright and early here in Dillon, Montana. It's about, 21 after 6. So I'm money never sleeps, guys. Money never sleeps. So we've got to get in. We've got to get in while the getting's good. And if a person trades CPI right, you trade CPI and then trade the U.S. Open after CPI. You really, if you do the right things, you should be done by about 9 o'clock my time. So that's one of the great things about being a short-term trader, a day trader, a scalper. If you get hot and you do this right, you don't have to sit here all day. You can make more money in just a few hours than you can, go into the factory and work in 12. That's the truth. Take it from a guy who's worked on the oil rigs, who's worked on construction sites. This is one of the reasons why I'm in front of the screen is money, pure and simple money. Mark Corp, how am I doing? I'm doing all right. It's a little bit early for me, but that's okay. We're on and we're ready to roll. Teamy, is the sun up? Heck no. Sun doesn't come up at least for another hour. That's for sure. If you guys need a place to trade, be sure to swing by Switch. We're still working with some pretty good stuff with regards to our deposit bonuses, and we do have definitely some stuff there that you guys should check out. Switch markets, if you're overseas, you can definitely get down on that. That's one of those things that we promo pretty much every day. But if you do need an out, if you do need a broker, you can definitely get that done. So check it out. All right, guys. This was a trade idea that we had out yesterday. This is the 5-8-13 strategy. This one right here, this was sort of a daily. This is our silver trade. We had a daily crossover back here on the 3rd of December. It's been absolutely fantastic. I got to tell you, this 5-8-13 is really growing on me, and we're going to try to execute a few of these trades today. Right there was our crossover, and then our trade idea yesterday, I was going to recommend buying a pullback from that 62% retracement level, really the last 3 days range. We had a pretty good chance to really bid that right from that 8 EMA, and what happens? We don't quite get our pullback before we get the big bounce. I'm still watching that area though. That was out in yesterday's trade idea, so if you missed it, check it out. Yeah, the sun doesn't come up for quite some time. This is the dark time of year. If you guys live in the northern hemisphere, boy, it's dark. We don't get much sunlight at all here. Got to supplement with that vitamin D. D3 will keep you okay. You got to make sure that we just stay even keel though. A lot of people call this the silly season because there's no sunlight really. Remember, even keel. We don't want to make any big swings when we're not at our best. We'll be at our best after New Year's. We'll be ready to roll mid-January. That's when that leverage, that's when I start pushing the chips in. That's what we need to do. Arjit, Shane is up early. Good morning. Good to see you, Arjit. Zach Mack, good to see you. Zach Mack 4, always a pleasure, guys. We got a lot of the normal traders in here. Bobby Bob, Mark Corp. Okay, so that's a good look at silver. What we want to do here is we do want to take a good look at gold. Now, Bluefin, good to see you, Blue. We want to take a look at gold. Gold's got a key level down there at 26.69. That would be my typical Fibonacci play. A nice pullback on the daily will give us an opportunity to bid that thing when the number does in fact drop. And also, if you're an order block trader, if you're a smart money concept guy or an order block trader, definitely be aware of that that supply zone right there, which is right up around 27.25-ish, 27.22. Could see some sellers there. I'm still bullish. We're going to dial this down to a real short time frame chart here in a second, but I did want to outline that. I wanted to outline that as being potentially what I would call definitely a key support level. So we'll start with our macro zones and we'll work right down to the micro. Dre Day every day. Good to see you. Plus K2 or plus 2K. If you're up a couple grand, fantastic. This is one of the other trades that we're going to really be looking at today. Euro USD 5-minute chart. Hopefully we get a trade to line up for us after CPI. I'm watching this closely. This is a 920. All right, 9 EMA, 20 EMA crossover. The video drops Friday. Check it out. I think a lot of you guys are really going to like it. Put a lot of work into it. So I hope you like it. And even if you don't like it, well, you can lie to me. That's okay. But it is going to be a pretty good video. Remember, the 920 with RSI confirmation right up there. What do you got? Anything above 70 on that RSI is going to tell us to sell the market. So technically right now, we're looking at a sell. We're looking at a sell, but we've also got some pretty good bullish movement. So if, in fact, we do see the Euro USD really take off, then we're going to be looking to trade Fibonacci's. I'm going to show you how to do that. Potentially trade pullbacks using the 920. Also the YM, this is the E-mini Dow futures for those of you guys that are in the United States and you trade futures contracts. This is interesting right here. Nice big weekly number. I'm looking at 43/8 very closely. That's about 500 points south. I don't really know that we get there today, but I'm watching that closely, but we're going to dial that down to a short time frame as well. And then, of course, the dollar CAD, big day for the Canadian dollar. BOC comes out in just a little while. They're going to give us their interest rate verdict, and that's going to be absolutely huge for the Canadian dollar. And also, this CPI number is going to shake it up. So as far as our short-term trading goes, I'm going to dial this. This is a spot gold. I don't like scalping spot gold. I know a lot of you do. I don't really care for it, but we're going to be looking at a 1-minute chart. If, in fact, we get our pullback buy from our key level, that's a no-brainer execution. But for right now, I'm looking at market structure, and I want to see exactly what gold's doing as granular as we can get, and that's about a 1 minute. I don't go underneath a 1 minute, at least not on this, not on a spot futures, or excuse me, a spot gold contract. And the reason why is the spreads are significant. I mean, the spreads really are big, and I'm not too interested in doing that stuff. So we're going to go ahead and we'll dial that up and see if we can't get something executed here relatively shortly on gold. Okay, let's sort of run through CPI and what it means. If you're a beginner, be sure to check it out. I think that what you're going to run into here is going to be an interesting day for CPI. I don't really know which way this thing's going to go. I have a feeling that it's going to come in hot, but if it doesn't, then we have to be ready for everything. So this is what CPI typically does to the forex. Let me see, Dennis Fudd. I meant vitamin D plus K2. Absolutely. It's good to combine it. When is the CPI announcement? Absolutely. 3 minutes. Let's run through it. Okay, if we get a low CPI number, it's going to be bearish for the USD. If we get a high CPI number up and over our expectations, that's going to be bullish. That's going to suggest that maybe there's more rate hikes and some tightening on the way. You see right here, this is what we're looking at. Our expectations, really, this whole giant list of numbers, we expect it to be unchanged. It maybe tick a little bit higher year over year here, and maybe up a tenth month over month. But I see these as being relatively the positive expectations. The market is really looking for us to make a dent. To really make a dent into what has been just a disastrous inflationary cycle since COVID. Inflation has not gone anywhere since 2021. There's no question about it. So we're watching these numbers closely. The one I'm going to focus on, and the one that I always focus on, is that raw CPI index. I don't get caught up in the growth numbers. Now, everywhere you look in the financial media, they're going to be quoting growth numbers. Growth. Well, it didn't grow as fast as we thought it was going to be. I'm tired of this. I'm tired of it. I want to see a plateau. I want to see this number, absolutely, this raw CPI index, I want to see this thing flatline for a few months so we can say, okay, maybe we're getting back down to the Fed's 2% target. And you can see right here, this has been the story of this year. 2024 has been the story of inflation. That was a major market driver in the U.S. election as well. Really determined a great deal of the outcome. People are not happy. They're not happy. Not happy about those prices. Neither am I. I'm one of those that are disgruntled. I think prices are way too high. There's a lot of reasons for it. Take a look at what we had last December, though. A pullback. Do we get that today? I don't think so, but maybe. Right here, this is the chart that all economists are scared of, including the U.S. Federal Reserve. Why are they scared? This is the all-time look at inflation. Now listen, inflation always rises. Right here in 1970, early 70s, the United States left the gold standard. That's when it was truly a floating fiat currency. And from then on, the inflation's been pretty much a 45-degree angle. So we understand inflation. We can live with inflation as long as wages grow, as long as real wages grow and it offsets everything. That's fine. The problem is when you get into a 2020 situation and you pump unlimited liquidity into the system and you get a major, and I mean a major breakout right there in inflation. That right above my cursor, that is what has everybody in the world really running scared right now and believing that potentially we could be headed for really a major economic meltdown if inflation doesn't come back into view. Let me see. I'm in crypto on a good long position. I hope it translates into a higher return in the short term. Yeah, actually, that's not a bad idea. Let's go down to Bitcoin. Bitcoin's fascinating. Absolutely fascinating. We talked a lot about the 100 level. This is a good look at our 5813 on the daily time frame. And I mean, look at that. I mean, this is what it's all about, is getting in on a big runner. Okay, our number should have just dropped. Let's see exactly what's happening to gold. Gold, okay, right there, bearish. If anybody has the print, go ahead and yell it out. Let's see. Okay, right here. Consumer Price Index in the United States decreased to 315.49 points in November from 315.66 points in October. Consumer CPI in the United States averaged 125.23. So no kidding. That is exactly what we want to see right there. That is exactly what we want to see. That is a downturn in CPI. It happened last December, and it happened for the first time this year. So what is that going to suggest? That's going to shake up our interest rate expectations for next week's meeting. I believe we are firmly going to be in rate cut territory now that CPI is coming down a bit. I still say it's way too early to get something like that done, but wow, what a dovish market driver for the USD. So let's see if we can get some trades right there. There's your 1 minute market structure on gold. I want to see this set up just a little bit longer. Let's dial it down to a 5 minute and see. Okay, we've definitely got a buying opportunity potentially down in here. The real question is it wise to trade right now? I would let the dust settle at least for another minute or two, and then we'll start talking about getting involved in the market with a little bit of meaning. But 26.95, somewhere right in there. Theoretically, we could bid that now if we wanted to. Believe me, this is extremely high risk. We're going to wait another minute or so before we get involved. Euro USD, there it is. There's the big spike in the Euro USD. We saw a big runner right up there. Let's see, this is the 5 minute chart. So your high is right up there at 105.34. We're still sort of in overbought territory on the 5 minute. Let's dial this down to a 1 minute on this 920 crossover and see exactly what we have. Okay, we're not quite in overbought territory or an oversold territory. So if we're trading this on a 1 minute chart, we've got to wait. We've got to wait for that RSI to get above 70 or beneath 30, and that's going to be exactly what we want to do to get into the market. Let me see. We've got a question here. Hey, Shane, should inflation ever become hyperinflation? Would that change the market strategy plan on FX markets? If it goes to hyperinflation, all bets are off. That means the U.S. dollar is losing pretty much all of its puff. And theoretically, if we entered a hyperinflationary cycle, you would have to see interest rates jump to 10, 12, 15%, maybe even 20% like they did in the 1970s to even slow it down. So if we reach a hyperinflation cycle, basically the U.S. dollar, it'll go through huge peaks of strength when those big dramatic rate cuts or rate hikes come, but more or less it's going to be dropping. And typically under that scenario, you will see traders run to anything else but the dollar. So you'd see like stocks would probably go up in that scenario. Commodity prices would go way up, and also your foreign currencies. There's always a ship with the least amount of rats on it, and that could be interesting. Which one would it be? Probably a new BRICS currency. I bet you crypto would go through the roof in a hyperinflationary cycle. Something to think about there, if in fact we ever get there. All right, let's take a look at our E-mini Dow. Our E-mini Dow right here is rotating. Let's go down to our 1 minute chart and see exactly what we have. Right there, this is beautiful stuff. Okay, let's get rid of that drawing. What did we have? We've got that great big CPI bar, which is an incredibly dovish print. And you see we already got our pullback in our rotation north. Classic P formation. Really would like something like this to the top side of the market. We just got to be diligent and wait and see exactly what develops here. Okay, so what happens with gold? All right, gold. We're headed north. Clearly, we're headed north. The real question is how can we get in on this action? First thing I would do, it's high risk, but risk versus reward. Right there, we dial this down to a 1 minute chart. There was our release. We're about 4 minutes in. We'd be looking to buy pullbacks now. You can see the breakout is starting to develop right above that upper Bollinger Band. Let's see if we can trade this thing. The big challenge for us is going to be getting in on a market that actually pulls back. So we're going to be moving fast here, and we're going to be moving to a couple of different strategies and see if we can catch this move. Right there, we're right at 2,700 now. I would love to buy 26.98 if I could get it right now. 26.98. We're going to go ahead and get in the queue. We're going to go 26.98. 75, that's what I want. I want to go ahead and buy limit, and let's go ahead and put that in the queue. So that would be our order placement right there. This is a 1-minute chart. Now we're just going to sort of ad-lib this thing. We're going to see exactly what happens and develops for our trade. I think we've got a pretty good opportunity if we get in on this pullback to have a decent trade. I don't believe we're done going up yet. That dovish print suggests that gold probably is going to run at all-time highs. And the reason why is you're probably in for another rate cut here next week. I'm watching the probabilities closely. We haven't seen much of a change yet at all in the CME Fed Watch. I'll update you when that comes. So right here, we could definitely be looking to bid right in this zone. This is an aggressive trade, though. We're not going to wait around. We're either going to get paid off on this bounce or we're going to bounce out of the trade. My stop loss is probably going to be right down here, maybe beneath 62%, but more than likely probably right around 50%. And I'm watching this closely to see if we actually get elected. Now, what else is going on in our world? Our 5-minute, let's see, our 5-minute right here. We want to get into oversold territory here on the Euro USD. That would be absolutely fantastic. I would love that. I think we'd have a real chance to get that crossover. The problem is the 9's got to cross the 20, so we've got to be in a position potentially to get into this trade to the long side. And it's going to be really hard. Right now, you're going to have to wait. So right now, I believe our gold trade just went. I'm sort of monitoring this. Pretty good bounce right off of our 38%. Our entry point was aggressive, but I really like it right there. We're up $45, $15, $23. I want to see us make another run at 2,700, and I think we could probably maybe be able to take the money right there. Let's just let this thing run a little bit and see exactly what happens. But right now, I believe we're on the right side of this trade. We're up about $70, $40, but the rotation is very real in front of 2,700. So watch those sellers. Now, I can't really do it because I don't have the level 2 data. Okay, that's the break we wanted right there. Okay, we're out. Now, that's exactly how we wanted to execute that trade using Fibonacci scalping. What did we have? We had a nice big opening range move. Bang, bang, bang. There was our peak. Where was our peak at? Key level, 2,700. Big round number. Buyers and sellers are there. There was your pullback. There was your rally. That's high impact scalping. That kind of trade makes me smile all day long because it was easy. Was our entry point the best? No, it wasn't the best. I mean, we bought in up here, but we wanted to be aggressive because we wanted to be on the long side of this market. And it's the right way to be. Now, why did I get out? Should I still be holding? If I'm a scalper, and a lot of you saw that tick scalping video, I've got a ton of questions on it. The tick scalping video it tells you to get in and out after taking just a few ticks. Now, it's harder on spot gold because of the darn spreads. Right now, I mean, the spreads are big. They're not easy to deal with, but that move right there, that is a beautiful look at how Fibonacci's and really fractal geometry can get you into some absolutely great trades. Now, how else can we trade gold today? Well, let's go ahead. Okay, we've nailed the scalp. Can we do it again? We probably could do it again. I'm going to leave it right there with a winner just because that was a real good illustration of how to trade this thing. If I wanted to trade it from a macro perspective now, what could I do? Well, let's look at our daily and give you really a good outlook on gold. This order block, don't ignore it. This would be a textbook supply zone. That's where the sellers have stepped in the past, more than likely right up there, right around 27, 21. That's going to be key. So I believe you could probably be bullish until we get up to that zone, and that's probably where you would want to take your short. Now, as far as a macro, a couple of things that I would stress from a macro perspective. If you want to back off to the monthly, what do you have here? November was your pullback month. All right, there was a lot going on in November. U.S. election, all of that stuff left the market. All the uncertainty left the market, and then you've got to get in. You've got to get into the market really to the long side now if you're on gold. But if in fact you are trading gold and you want to commit, there's a couple levels to be aware of. That first supply zone, which is right up there at 27.25. That's huge, and then also 27.90ish. That's going to be big as well. Why would 27.90 be big? Because it's the all-time high. This will not shock me at all if we go right up to 3,000. There you go. All right, Arajit, take it easy. Absolutely. Let me see. CPI plus 1% in November. It's fascinating stuff. I mean, it really was a big-time report. But for me, the biggest thing on the board is this raw data came off. It came off, and that's absolutely huge. So our interest rate expectations. We're still incredibly dovish. This Fed Watch is not really updated, but right there you can see we're ticking higher. We believe there's about an 88% chance of a rate cut that's going to come into view next Wednesday. So definitely want to take a look at that. I think that you're going to get dovish, and dovish. Today's CPI figures, essentially, I won't say they guaranteed us a rate cut, but I think that you're going to get it. All right, back to this. This is going to be really tough to even get a trade on our live stream here today. If we're in overbought territory, which we're not quite there yet, you got to see that 9 come back down over this 20 before you can get involved there, and we're just not there yet. We're not there yet. We need to see another leg higher, and then potentially that would be your sell. As far as the dollar CAD, this is one that you really need to be watching later in the day. Now, the BOC is going to come in. They're expected to slash interest rates by 0.5 point. They're going to come in here about another hour. It's going to be an interesting thing. It's going to be an interesting thing because the RBA didn't cut rates. Now we're saying the BOC is going to cut rates. What does that mean to the Canadian dollar? It's not good. It means that the Canadian dollar is probably going to be dovish. The problem you have with the Canadian dollar is U.S. oil right now is hovering right around $70, which is actually relatively strong for this time of year. That overthrow of Assad in Syria that came over the weekend. Remember, these things always come over the weekend. I don't care what anybody says. Your big economic events or your big geopolitical events that impact the economy and the markets typically always come on the weekend. A couple years back, it was North Korea would test ballistic missiles every weekend, and they would do it to influence the gold market. I'm convinced of it. Now, Assad gets overthrown, happens on a weekend. What does that do to crude oil? It holds crude oil up around $70. And that's absolutely huge for this time of year. We're in December. We're pricing winter seasonality. We should see a downtick. We should see a downtick in crude oil prices, and we're just not seeing it. So from my point of view right now, the Canadian dollar is definitely in a state of flux. This would be a level that I would watch extremely closely if, in fact, you're going to trade the BOC, the Bank of Canada announcements that are coming up here just a little bit later today, 141.25. You're going to be in pretty good shape there. Realistically, if you do get this nice pullback, something like this, boy, I'll tell you what, they ran some updates on TradingView, and I am not impressed. Right there. That's a pretty good bid zone right there, 141.24. And then you've also got the 62% down there at 140.80. I think this entire zone, this 40 pip zone, if you wanted to make a stand on the dollar CAD, probably right there. Now, you've got a dovish print for the U.S. dollar, which is going to bring some bears to the dollar today. That theoretically would send the dollar CAD down. But remember, we have the EIA oil report today, the supply report that's coming out a little bit later today. That's going to give you an opportunity maybe to see some more action in the dollar CAD. Would this be a pair I would trade today? I would be very careful. Bank of Canada and an EIA report and a CPI report. Can it even be done? Can you even trade this one profitably? It's going to be a challenge. It's absolutely going to be a challenge. That's for sure. Yeah, let me see. FA, yeah, and a Hamas attack was Saturday too. It always happens over the weekend, guys. Always. In any case, right there, that would be my key level. I wouldn't have any problem bidding 141.25. Stop yourself out underneath 141. You can put a stop loss right down here. I probably would recommend just cutting this thing off somewhere in this area, probably 89-ish, and then maybe going long again. Your best bet here, if in fact you wanted to be patient and bet with higher or trade with higher leverage, take a greater position, right there, 140.80, somewhere down in there would be your bid. So I would be watching the dollar CAD relatively closely. Now, as far as what we could do with U.S. equities, remember, these U.S. equities indices are always a challenge. Now, you can see the 1 minute action, on this E-mini Dow futures. The reason why this thing is dried up, there's your CPI number. There's your big rush of volume right there. You can see big green candle. We traded about 789 contracts in a minute. That's fairly significant. That's heavy volume, what we call heavy volume for the E-mini Dow futures. But right here, what's happened? Volume's dried up, but we're still bullish. Now, what we saw today from this CPI figure, that's going to send stocks higher. Anything that realistically is going to hurt the dollar is going to send risk assets, stocks, and commodities higher. So definitely a bullish market driver. The real question is are the markets believing it? Okay, right here. This is the update I wanted. CME FedWatch Index, 96.7% chance of a rate cut. All right, it's a done deal now. That CPI figure, the Fed's going to come out. They're going to spike the football next Wednesday. Jerome Powell is going to wave to the crowd. And he's going to say, we are the greatest. We are the greatest. We've got this inflation licked. All we've got to do is stick to our plan, and we're in the money, and we'll see. They said that last December too. Right there, though, there's your uptrend, and this could definitely be a bullish day for U.S. stocks. Let's dial this back to a 5-minute chart. really pretty good stuff here. I mean, it was incredibly bullish, no question about it. The bullish breakout's on. Can you get a pullback to get you into the market here with this futures contract? I think it's risky. I really do, just because the volume's dried up. One thing that I will say is if you got long, say, the US 30 or the E-mini Dow, and you've made a stack of money, don't be afraid to put it in your pocket and walk away ahead of the US Open. US Open's T-minus 45 minutes. There's liable to be a reversal in here, and it could be significant. If I was trading this on a 1-minute chart, I don't particularly like it as much as I did. Back here, we're outside of that upper Bollinger Band that tells us we're trending, and we sort of had a deep pullback. And now the question is are we going to push higher, higher, higher? I don't know. I don't really know. I think that we could easily go sideways until we get into that U.S. session. Let's go ahead and take a look at so what happened to Bitcoin. Bitcoin on the daily, we're up about 2% here. Let's dial this down to, say, a 5-minute chart and see where we're at with this. Is our 5-8-13 strategy, which is a pretty darn good strategy. I like this one right there. The entry rules are simple. You're waiting for the 5 to cross over the 8, and then you're waiting for price to be to close, a bar to close above, or at least close for the moment above all 3 on a buy. So it's easy. So right there, there's your 5. There's the red one. That's our trigger EMA. Crosses over our 8. And then we get that bar close right up there, right around, let's see, right around 98.4, somewhere in there. And then there was your big rally that came out right on your CPI number. So remember, we're starting to see those correlations, big-time correlations between that weaker dollar and higher crypto and higher stocks and higher commodities. This is pretty good stuff. I mean, this is pretty good stuff right here. This isn't bad at all, bad trading. What would I say? Where would I say to buy right now for Bitcoin? It's kind of tough. If you want to send them long, you can. Just stop yourself out. So if I was going to do this, like this right here, this big washout candle, this knocked a lot of traders out, knocked a lot of retail traders out, especially leveraged ones. But if you were playing this crossover from down here, I mean, essentially you're waiting for the CPI print. There's your stop out. Your stop out's down there at about 98.1. So if you bought right there, you got a 1-to-1 pullback, an easy 1-to-1. The question is do we keep buying here or selling? You could buy it and then just get out when the 5 crosses back over the 8. You could do that, but you probably missed this one, I would say. But look at the volumes, big volume there, and you see when you have no volume, the market comes off in a hurry. Yee. Pretty risky. Arshad Khan, Shane, if you have time, can you explain why CPI is dovish, please? Absolutely, Arshad. Let me go ahead and let me pull up. Let me look at the exact numbers. I want to see the exact numbers. Let me see. Nice friend. Hey, nice friend. How you doing, sir? How does the USA index reacts? May I know? Okay, yeah, we'll answer these 2 questions and then we'll call it. First, we'll start with the dovish, CPI dovish, and that's going to play right into your question too as well, nice friend. Let's see. Let me pull up the numbers. All right, let's go ahead and do it. All right, here's a good look at, just a basic look at our economic calendar. We talked about our expectations. Core CPI came in as expected, both on the monthly and the yearly. So that's sort of a pause. 322.66. That still means core CPI is moving higher. Core didn't fall. So right there, then CPI 0.3% came in as expected. 2.7 came in as expected. But the big number here is this, 315.49. Now, you wonder, you say, okay, the number's in, we hit expectations, so you're seeing CPI grow as we expected it to. All right, yearly it went up as we expected it to. These numbers are in line with expectations. That means that we expected this to happen. Now, the growth rate is still there. You still see prices ticking higher on a relative basis, but that raw CPI index, that chart I showed you, that's sort of a little known fact. That's sort of a secret that a lot of the traders, they don't focus so much on the growth numbers. The media does. CNBC and Bloomberg will. They'll focus on these growth numbers because that's typically how we think of things in terms of growth. Okay, what's it going to be tomorrow? But the actual hard data shows you a pullback. That NSA CPI, that's really the big headline number. Now this one right here, this one came down, this one came up slightly. The CPI index SA, I'm not going to talk about the differences because they're minute. Basically, that basket of goods and services has some goods in it for this NSA, and then it omits other goods for it as well. Forget about that. Don't worry. Well, it's seasonally adjusted essentially, but this is non-seasonally adjusted. But what we got to do is just remember these are academic numbers. Don't get too carried away. But what we need to see is start to see a pullback in that raw index data, and we saw it. And that's one of the reasons why your dollar is dovish. It's holding right now. The dollar index is at 106.39. That's sort of a flat line. So I see that as being an extremely dovish read for the U.S. dollar. Why? Because this is what happened. It came in as expected. We feel like we're turning the corner in the war against inflation. We also thought we were turning the corner last year, last December. I'm not buying it just yet. Now, a lot of people believe inflation's over. So that's sort of how I would read that right there. Let me see. VJ, good to see you. That's how I would read that, Arshad. That's why it's dovish, is because of that number right there. We hit our expectations. It's in line. We start to feel like we understand inflation and that it's coming down. What that does to Fed expectations is it sends them into rate cut territory. That means if pricing stability is under control, we can cut interest rates to try to boost that jobs market, which is kind of in trouble. Now, we saw a big jobs print that I don't believe it for a minute. I believe that will be completely revised down next month. But you saw that NFP come in, okay, big number, big NFP, and then you saw inflation come in as expected. That next Wednesday at FOMC Live, this is going to be an absolute party. I wouldn't be surprised if Jay Powell came out and he had a glass of scotch in his hand. They are going to spike the football and say, we've got everything under control. And then when things get out of control next year, or if inflation doesn't go away, they're going to blame the Trump administration and they're going to blame tariffs. You can take that to the bank. That's what's going to happen. So when I look at something like that, I say it's extremely dovish right now for the U.S. dollar. That's absolutely fantastic news for stocks. That plays in a nice friends question. Stocks, what about them? Well, we already see our uptick we've already seen our uptick in commodities. Gold is up. U.S. oil is up about 1.5%. A lot of reasons for that, though. Right there, you can see that was really a beautiful trade. 5 minute, we traded it on a 1 minute, but that 5 minute pullback right around that 97 area, that's absolutely fantastic. That's a big move. Right now we're consolidating right around 27.01. Now let's take a look at a U.S. index, because nice friend asked. He said, okay, how exactly does this impact U.S. equities? A dovish dollar is going to send equities higher. Why? Because if we start cutting interest rates and we start injecting more money into the economy, all right, we inject more money into the economy. We're trying to promote economic growth. That's all fine and dandy. Those dollars they're worth less. And as a dollar loses its value and it's worth less, what goes up? Raw materials, commodities completely go up. Things like gold, things like crude oil. Crude oil, that's a different story. We'll talk about that, but definitely gold and silver. Okay, those two things are going to go up. Grains, soybeans, wheat, lean hogs, all right, beef, feeder cattle, live cattle. Those things are all poised to move higher. Now, what happens to stocks? Stocks are poised to move higher too. Now, here's the thing. The stock market's going to be a little bit different in 2025 because tariffs are going to come into play. So I can't just tell you, well, the indices are going to go up because of a dovish dollar. That's not necessarily going to be the case. But typically, that relationship between the dollar and stocks is an inverse relationship. Dollar falls, stocks rally. Dollar rallies, stocks fall. Why? Because when my dollars have more, they're worth more, stocks are worth less. I don't want to part with my dollars. You see what I mean? Something to think about there. I hope that explains it. But right here, I mean, if you're trading the US 500, something like this, 6,054, that would be fantastic. Let's go down. Let's pull the E-mini S&P 500 futures. This is one of the contracts that I trade. It hasn't performed for me very well in the past few months, but I've been trading the E-mini S&P 500 for about a decade, so it is what it is. But pullbacks right there, that would be on your futures contract. I'd be in pullback buy mode. Just be very careful on that U.S. Open, because this 30-minute chart, okay, right here, my bread and butter for the U.S. session, 30-minute chart. Take a good look at what happened. I stress this concept a lot, and we'll go to the highlighter here, and then we'll start getting on down the road. You can see what happened. Look at that washout. So you traded beneath the previous 30-minute bar. Okay, you traded beneath there, and now you traded the high. What happened here? You stopped out a lot of retail longs right down in here. Now, you didn't take out the daily low. Definitely keep an eye on that. And then you knocked up pretty much all the retail shorts are now out of the market. So if you were looking at this as being sort of an interesting type of a dynamic that you wanted to trade today, there's your CPI bar. The next big bar is going to be not the next bar. The next bar, more than likely, the next price bar, more than likely is going to trade right inside of this one. It may peak, but I don't think that we're going directionally in the next 30 minutes. But when our U.S. Open comes through and we say, okay, let's say our bar is somewhere in here, somewhere right, local to the CPI range. The next bar is going to trade more than likely outside of CPI one way or another. So definitely, if you're trading U.S. stocks and you're scalping and you're interested in this U.S. Open, definitely note these numbers. They're very important. Now, we'll either see a bullish breakout or maybe nothing at all. I don't believe we'll see a sell-off given this fundamental market driver, but I'm not sure how high we go. I think the markets have already priced in that rate cut, but we could definitely see some great day trading, and there's going to be a lot cooking here, a lot going on. So, all right, guys, that's pretty much a wrap for now. Pretty much beat a dead horse for about an hour. Absolutely, Arshad, you're welcome. Let me see. 2002, great stuff. How would you play the SPY or QQQ trades? Okay, I'll pull a QQQ chart. Absolutely, 2002. FitLife. Hey, Shane, your thought on the USD? I am in a buy. Yeah, it's not bad. I'll cover that one as well. Hey, Shane, would you buy now or wait for tomorrow or Friday? I would wait. I would wait for tomorrow. I'd wait for the dust to clear before taking a position. But if you want to scalp the rest of today, scalp. But if you're going to take a position, you've got to wait. You've got to wait till the dust clears today. I don't know that we're in it for a clear-cut trend day. And let me see right there, good explanation. Okay, all right, we got a couple questions here, and then I'm going to go ahead and sign off. I'm more than happy to cover anything you guys would like. Let's go QQQ. No, we don't want crypto. We want right there. I'm not real big on ETFs. I'm not, or mutual funds, but what I would say is well, I mean, there's your pre-market. Look at your pre-market move right up there at 23, up from 20. So let's go to a daily here if we want to break down this QQQ. Okay, this is fantastic stuff right here. The first thing I would be looking at, spike low, spike high. Oh, baby, we got a gap. Can you short this thing? I don't typically trade ETFs or mutual funds. I trade futures, but that's a gap. That's a daily chart. That's a gap. 3 rules of gap trading. Gaps get filled, gaps get filled, gaps get filled. So I would expect, even though we rallied right here on that dovish dollar, I wouldn't be buying yet. No way. Right down there, right around 517 and a quarter, somewhere right down in this gap. I would expect this gap to be filled here in the coming days. If in fact you got it filled today and came off down there and got an opportunity to bid right there, oh boy, that's a pretty darn good bid. That's a pretty darn good bid, Sprocket. Yeah, I would wait for that to fill in, potentially bid that. That makes my eyes light up, actually. I would love this if we just milled around up here for another day or two, and then we got our moving average to sort of creep, our 13 EMA, creep right up there to 517 and a quarter, rotate around, and then we look to shoot that long. That's where I would buy. I wouldn't buy just yet. Now, if we push higher, we'll see what happens there, but this right here, this is pretty good stuff. So dovish market driver for the NASDAQ, definitely. Dovish market driver for tech, but I'm curious to see what happens. Don't be fooled. Don't be fooled. Just because we got a dovish CPI doesn't mean these markets won't reverse. So be very careful with that. All right, let me see the SPYS. I already covered the E-mini S&P 500. Be careful with stocks today. They typically reverse. All right, everybody. I'm gonna go ahead and sign off here. Let me see. Bluefin. What's the U.S. Open? It's not on my financial calendar. Bluefin. The U.S. Open is going to be the Wall Street Open. That's going to come at 9:30 a.m. Eastern or 7:30 a.m. my time. It's about 30 minutes from now. And what that is that's opening bell, ding, ding. Opening bell, that's on Wall Street when they bang the gavel and everybody starts having a party and all the money flies into stocks. All the retail money flies into stocks and a lot of institutions as well. Never forget that time of day, Bluefin. If you're trading the U.S. session, 9:30 a.m. Eastern, 7:30 a.m. in Dillon, Montana. About 32 minutes from now, they'll bang the gavel, and you're sure to see some real action, especially in these futures contracts. I always look at the 30-minute for market structure, and that'll give you a pretty darn good idea of what you're looking at. That's a big move out of the Dow. That's a big move. We'll wait and see what happens, guys. All right, everybody, I'm going to go ahead and sign off here for till tomorrow. Got a lot on our plate today. We got 2 streams planned for you Friday. We're going to do some live trading, some live scalping. We're going to do a complete strategy session. And then also we're going to have an actionable trade idea out probably in the next hour or so. And we're also going to be back in the saddle tomorrow trading the S&B and the ECB Forex fallout. Remember, there's an absolute ton going on right now. You've got the BOC coming our way in about an hour and a half. If you're trading the Canadian dollar, be ready. during the overnight, the SNB, the Swiss National Bank, that's huge. That's absolutely huge. Understand what's likely to happen to the Swissy. We're not expecting much, but they are rogue. The SNB are the cowboys of the forex. They will do anything they want at any time they want. Big volatility probably headed towards the Swiss franc. And then lastly, the ECB. You're going to get a deposit rate decision, and that's going to impact your euro. So if you're trading euros, you're trading Swissies, you're trading Canadian dollars, be ready. Be ready for anything, and we're going to cover all that Forex action on tomorrow's live stream, which is coming your way during that U.S. mid-session brief at about 1 p.m. Eastern. All right, guys, that's a wrap. If you have any questions at all, swing by the How to Trade trading room. Just go ahead and log in, sign up, and send me a private message, and I'll be sure to get back to you as soon as I can. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.